right. Hey, welcome everyone. This is the 16th Veteran ETA Roundtable. We're here with Patrick Dichter. We're going to be talking about acquiring accounting firms and how to streamline accounting post-close. First off, thank you to all the new members. I think we're just hit 165 in the group, so continue to grow, and it's really great to get to connect with new folks. And as always, please reach out with any questions and get into this Slack channel and connect and introduce yourself so you can connect with other veterans. First off, as always, quick disclaimer, none of this is legal or financial advice. And then secondly, exciting, he is not here because he's playing baseball, but I do have an intern, which is exciting. He's a Richmond master's student. And so if anyone is interested, he's looking to kind of help out with searches. He's also helping me out with some of the recordings and kind of managing things. So he's a great guy. Happy to send him your way for anything, and just let me know what you would like him to do, and I'm happy to connect you guys. So I'm going to introduce Patrick, and then I'm going to let Patrick kind of get into his presentation, and then we'll have a great conversation, and we'll go from there. So Patrick Dichter he's the owner of Apple Tree Business Services, which is a bookkeeping and tax firm. Patrick has over a decade of experience in helping small businesses thrive and grow. And Patrick saw the critical need for better bookkeeping and cash flow management, and led him to acquire Apple Tree in late 2021. In his 2.5 years, he's bought 2 more firms and 3x the size of Apple Tree. His journey includes building a digital marketing startup from the ground up and working as a trusted advisor at Cultivate Advisors. Patrick holds an MBA from the University of Denver, and he now lives in New England with his wife and 3 sons, balancing his love for business with a serious fly fishing addiction. I can feel you on that. And personally, I went out to SM Bash a few years ago, and Patrick was like one of the nice people that was, I didn't even know he was this, he's been on Acquiring Minds twice, kind of a big deal. And he was so nice to just a silly MBA student that had no reason being in the room. And we talked about jam bands and other things. And he's just a great resource. I've actually connected him with a bunch with some veterans here. He's always down to help searchers. So, and also I just want to mention they launched he and Clint Fiore, I want to pronounce that correctly. They launched their own podcast, which is Inspired or Acquired. Highly recommend checking that out as well. So, thanks so much, Patrick, for your time. I know you're a busy guy. Thank you so much for being here, and the floor is yours.
Awesome, man. Thank you for having me, Charlie. This is pretty neat what you guys do, and thank you to everyone in the community for your service. We are indebted to you. So hopefully I'll make your time valuable. I really want to hit 2 topics, and feel free to stop me if you have questions. But the first would be my experience acquiring accounting firms. So if that's an industry that you're interested in, I'll just share my experience and some pointers. And then the second thing would be just generally pointers for once you close on the business, how to make your accounting, finance, and tax smooth post-close, and some things to avoid as you take over the business. So let me share my screen here. I am more used to Zoom, but let me see if I can navigate the slides. Alrighty, you see that okay?
Yep, looks great.
Cool. Okay, so here we go. A little background on me. Next slide. Try scrolling and zooming. Okay, sure. Man, sorry.
All good. The good thing is my very limited iMovie skills. I can edit this all up, so no stress.
It just is like not coming to the next slide. Allow to scroll. Let me see.
Zoom was like I had it on Zoom.
There we go. We can intro. Can you see that?
Looks great.
All right, cool. Anyways, yeah, I am not an accountant by trade. So I spent 7 years at a digital marketing startup in the sales role, and then I spent 3 years doing small business coaching and consulting. And all my consulting clients would have terrible bookkeeping, and I was always referring it out. And it was a game changer for these business clients of mine. And they started to hear about people that buy businesses. And then I just kind of went down the rabbit path, or the rabbit hole, trying to buy a business. And I broke every rule of search. I bought small. I was focused on one industry. I did proprietary outreach. Everything they say not to do in the Harvard book, I did, and it worked. So I think there's a lot of different flavors of ways that you can do search. So So for me, why bookkeeping firms? If you're interested in the industry as a searcher, I was already referring out a lot of it. I liked that there was recurring revenue, sticky clients, good margin, it's recession resistant. And I felt like it was a fit for me as a buyer because my strong suits are B2B sales and marketing. So I could just picture myself owning that type of business, like professional services, like serving small businesses. It just felt like a fit in that sense. So basically what ended up happening was it was really, really hard to find anything worthwhile for sale. So if you go look, I started out trying to buy just pure bookkeeping firms, and what's for sale is like 300 revenue, 400 revenue, and like 80K of SDE. You don't see big enough bookkeeping firms for sale that would be a good search target. And if you include tax, you'll see a lot of really old school firms that are like paper-based firms and underpriced and very owner dependent. And then there's some brokers in this space that just didn't want to work with me because I'm not a CPA. As much as I try to explain, I have an MBA and I've taken a lot of accounting and finance, and here's my business plan. The brokers in this accounting space just, they wouldn't have it. So I ended up having to do proprietary outreach and like cold email myself out of necessity. So I was frustrated and I was like, you know what, I'll show you guys. And unfortunately, that's still the case. Like I talked to a lot of other people looking in the accounting space, and like these brokers are still just like very close-minded if you're not a CPA. So what did that look like? My proprietary search. Let's go to the next slide. There we go. This was a cold email. This was the one that led to me buying Apple Tree. So there it is. Steve, who I bought from, said, I'm game to talk, and we set up a call. So essentially 500 cold emails led to about 20 seller calls, and then that led to 6 LOIs and the first one that I bought at the end of 2021. So if you want to learn how to do proprietary outreach, I can send you the doc on how I did it. I think more often than not, your best bet is broker deals, but sometimes you have to do proprietary because there's just not much available. So what was the profile of the firm? The first one was doing about 1.2 million in revenue and 330,000 of sellers discretionary earnings. And they did bookkeeping, tax, and payroll, 12 employees, and 1.3 million purchase price. So I paid nearly 4x SDE, and some people would say I overpaid, and I do think I overpaid a little bit, but I wanted to close, and I felt like it was a good one. So I wanted to close November 1st, and like a good true accountant, he wanted to close at year end, and so we closed December 31st because he wouldn't budge on the closing date. So that was the first one. My vision at the time was to get the first business from 1.2 million revenue to 5 million. So just like my North Star has been like 5 million within 5 years. And the reason I thought 5 million was that it would be big enough where I didn't have to work in it quite as much. We'd have a leadership team in place. And then my vision was to try to start buying other types of businesses. So the accounting firm would serve as like a platform or a holding company, and that would lead to relationships and cash flow that would allow us to go buy other types of small businesses, whether we bought, landscaping business or a SaaS company, whatever. So future holdco bro was the vision. So I'm a little over 2.5 years in, and we're a little ahead of schedule. So part of what helped with that was I ended up acquiring 3 firms within the first 12 months. I don't recommend this, but it is what it is. This is kind of what happened. So I closed on the first firm, and then the second one was friends with the first guy, and he approached me, and it was like a small tuck-in, very identical firm. It was easy to like integrate. And then a few months later, there was a firm listed for sale by the owners themselves. So they put it on a website. They hadn't hired a broker, and it was about 700K in revenue and like 500K of SDE. It was like insanely profitable. And I thought that third one was going to be like the home run, the one that just like went great, and it ended up going terribly. And all the other deals have gone really well. So that was my first 12 months. It was just like a roller coaster. And the other thing that I would say to people is it is like a tenth of the effort to close additional acquisitions once you've done the first one. So I know a lot of the traditional search books will tell you you got to buy as big as you can, but my experience and a lot of other people, like after you buy that first one, you can buy second, third much easier if you want to. So then I was just tired. It was the end of the year, and a fourth one came along. A big firm reached out to me, and they're like, "Hey, we have these clients that aren't really a fit. They would be a fit for your firm. Would you want to buy them?" And I was just like so tired at that point of integration, and like I was just like, "This is probably a bad idea." And I made them a really low ball offer that was like a third of the price of like what market would be, and like all seller financing, and they said yes. And I was like, shit, at that price, I got to do it. So that was the fourth one. So I don't talk about the fourth one quite as much because I don't know if that firm wants me to publicize it. They kicked a bunch of clients to the curb, but that's what happened. So it was kind of a fast and furious acquisition run. So where we ended up 2.5 years later was I essentially built the firm that I wanted to find when I was first searching, if that makes sense, right? Like, didn't get the dream home. I had the starter home, and then I, remodeled it as I went. So within 2.5 years, we 3x'd revenue. The team went from 12 to 35 people, and it's much more modern. It's much more stable. And I have a third of the debt that it would cost to pull this off today. And we've won some awards. Like, we're not perfect, but we've been recognized by Clutch as within the top 10% of accounting firms nationwide, based on client scores and based on their criteria. So it's been a fun, cool journey, and it's been messy along the way. So let's talk about where I was wrong in my business plan of like wanting to acquire accounting firms. Everyone's heard Nick Huber, right? Like self-storage guy. I heard him on a podcast, and I thought the same thing. Like he'll buy a storage facility, improve it, does a cash out refi, and just goes to the next one, the next one, the next one, the next one. And I thought it could be the same thing with accounting firms, like buy one, improve it, modernize it, go to next. And it's not like that. The tuck-ins are so hard. I know it seems like I'm going to acquire 1 million firms, but like after those first few, like I've stopped, like I've passed on a lot of really good firms, just because the integration is so hard. Like there's so many different pieces of software within a firm. There's so many different like pieces of information with bookkeeping software, tax software, payroll, the way clients get billed, practice management, where all the data is stored. So it definitely catapulted us to where we want to go, but I slowed down on the acquisition side. So I was wrong about wanting to do a bunch of those. The other thing I was wrong about, I thought I'd be able to cross-sell consulting services and cross-sell fractional CFO services really well. And I just haven't been able to. We perform those services. I think we're really good at it. That's what I was doing previously. But what I found is like once somebody is an existing client, they're just kind of like complacent, and they're just like locked into like a certain perception of what they think they need. So we've been able to sell more services and increase our new average client size. But for like legacy clients and existing clients, they're just like very, very cold to anything new. And the other thing that was eye-opening is I was just wrong about like what I think matters to clients. Just one example would be, I love like financial dashboards, and there's some really nice reporting tools out there. And as I was debating these and looking at it, and I talked to some other big firms, they're like, we have the data, and like maybe 20% of our clients actually look at their financial statements. Whereas me, I'd like love to look at like fancy dashboards and like KPIs, and just like the typical small to mid-sized business owner, they just don't care. They want to know that their taxes are done. They want to know that somebody's looking at it. And it's more of a peace of mind thing. So that's actually why we really like working with searchers, because they do care about the numbers and they're appreciative of what we do. But most clients, they just like don't care about what I would care about. So that's where I was wrong with my business plan. Where was I right? My skill set was a really good fit for this type of business. So the reason I say that is, professional services, like your craft gets you up to a certain level, like $1 million in revenue. And then from like 1 to 20 million in revenue, it's all about sales, recruiting, holding people accountable, developing leaders, improving tech. Like those are all the things that get, a firm to scale. And that really fit with my skill set. So it's kind of a blessing and a curse that I'm not like in the weeds day to day doing bookkeeping and doing taxes. So that's helped us grow. And I was right that I could grow it. I bought on the small side, and my wife was on unpaid maternity leave, and like I'd basically just taken every dollar that we had in savings to like buy the business. And I was banking on being able to grow it, and I've been able to do that. And I was also confident that more acquisitions would come, and that's been the case. So that's where I was, I guess, right with the plan. So yeah, and I would say all in all, like it's been harder than I thought to run an accounting firm, but there's more opportunity than I thought, because there's such a shortage of accountants right now in the US, and most people don't really love their accountant. So it's a weird place to be. Like there's a lot of demand, and if anything, it's just trying to manage capacity and make sure we deliver on all our promises. So that is my story on the accounting front. So I don't know if before I hit the next segment on like what to do if you buy a business, how to streamline your financials and all that, does anyone have questions just on the accounting space and these acquisitions?
I have one question, Patrick. What's kind of your take overall? And maybe this is personal, but like I think professional services are very interesting. From a lot of people talk about law firm acquisitions, things of that nature. Do you think that there's a lot of room to grow in this space, or just got kind of a tough barrier for entry, and then once you're there, you can grow, or kind of just on a what's your take, I guess, generally speaking on professional services?
Yeah, I would just say in the accounting space specifically, it's really hard to buy a good firm because they sell really fast, or they just don't come up for sale. But once you have one, you can grow it. So because yeah, there's so much demand in the accounting space right now. Staffing is hard, especially in tax, but I still think it's a really good category for searchers. I can't speak to law firms. Like I just don't know what it's like to own one, but I've worked in a marketing agency for a long time. I'd be very careful to buy a marketing agency because their churn is so much higher. Like if there's something really unique about it or proprietary, a marketing agency might be good because it's like, you don't have CapEx, it's remote, you have good gross margin. But just for example, like we typically churn 10% per year with an accounting firm, and marketing agencies will churn like 40% per year. That's the average. So you just have to think that like you're replacing like 40% of your clients every year. So if you don't have like a really good sales and marketing engine or something unique that makes them stickier, that's just hard in an acquisition when you have fixed step payments. So that's my experience on like accounting and marketing. I've seen some people acquire like government services and do really well, like government consulting services. I've seen some like niche, like environmental consulting or environmental testing and engineering acquisitions go really well. Yeah, I think what you typically see in professional services are like small cottage firms, but if you can buy one with a little bit more size, they can be good targets for acquisition.
Terrific. And maybe just kind of don't get stuck in the HBS guide on how to do it. Maybe like you think about it in a more proprietary context? You think that's kind of it's not analogous.
I'm probably a terrible story of survivor's bias, So I tell other searchers, like I talk to people all the time that are trying to buy accounting firms. I tell them like, you're better off having a CPA partner. Like even if the person's only 5 or 10% equity holder, just the fact that you can tell brokers and sellers and bankers I have a CPA partner, it's just like this. They're like, oh, okay, great, because yeah, trying to get into the space as a non-CPA, there's other people that have done it by all means, but it's just really hard to like get that first deal done.
Great, thank you.
Yeah.
Hey Patrick, it's Israel here, man. I'm sorry I'm a little late to the call, but can you clarify, man? Were you strictly looking for CPA firms, or were you looking for other industries?
Yeah, I was totally focused on initially. I was just trying to buy 100% bookkeeping, and then because I didn't find like big enough firms or much, I opened it up to bookkeeping and tax.
Got it.
Yeah.
Thank you, sir. Also, real quick, what was your background, sir?
Sales and consulting. I'm not a CPA by trade. I have my MBA. So everybody's next question is like, can you buy accounting firms? So the answer is yes, you can. There's tons of firms out there that are licensed as professional services firms. So they're doing bookkeeping and tax, and they happen to be licensed as professional services firms. In certain states, you can buy a CPA firm as a non-CPA. Each state has different rules. Like state of Texas, a CPA firm has to be 51% owned by another CPA. But if there's a firm in Texas that did bookkeeping and tax and they didn't choose to be licensed as a CPA firm, somebody could buy it who's a non-CPA. So depends on A, how the first firm is licensed that you're buying, and B, what state you're in, to be able to do it.
Copy all. Thank you, sir.
Yep. Any other questions for now? All right, let's shift gears. So let's talk about the other half of this. If you buy any business, how to really streamline your accounting and tax post-close and some things to avoid. Okay, so the old farmer's commercial where he's like, we know a thing or two because we've seen a thing or two. We've worked with a lot of searchers, and we've seen just a ton of messes where they don't do the right thing the first 3 to 6 months, and they just have a total nightmare of like bookkeeping, tax, and so you don't want to do that. So post-close accounting, this is a multiple choice quiz. So here's all the things that you probably need to figure out. And I'd be curious which one you guys think is the most urgent and the thing that people usually mess up. So you have entity selection, like how do you want to be taxed as an S Corp, C Corp, partnership? You have banking you need to figure out. You have credit cards you need to figure out. You have payroll you need to figure out. You have bookkeeping you need to figure out. And then who's going to do your taxes? Which one do you think is the one that people mess up?
Maybe it's the lawyer in me. I'm always going to go entity selection because then it gets messy trying to restructure post-close. But I don't know, between that and maybe payroll, honestly.
Payroll. Yeah. Entity selection is close, but yeah, people mess up payroll. I don't know why, if it's because it's just like it seems like a afterthought, or they think they can do it last minute. But like the number one thing you don't want to mess up is like upsetting the current team and their pay, right? But like so many people do it. They don't plan who their payroll provider is going to be, or they don't like do it in time, and they butcher their first payroll. So these are all the things you need to figure out. Like some of these, these mistakes can be forgiven. Payroll is not. So payroll is definitely something that like you want to decide who your payroll provider is going to be. You want to start onboarding 2 weeks before you close, and you want to have that first payroll like ready to go. Yeah. So I'll get calls from people that's like, oh, hey, it's September 18th. I closed on a business last Friday. Can you do my first payroll? I bought a landscaping business with 18 employees, and it's like that stuff just doesn't happen that fast. So, anyways, payroll's a big one. So, next slide. Here we go. Come on, scroll. We're gonna scroll on here. Maybe. What not to do. Is that coming up? There you go.
Yeah.
So what not to do. I'll tell you why in each of these. Don't do your own bookkeeping. So this is a common one, like, acquisition entrepreneurs, searchers are like, bro, I came from investment banking. Like I did Excel 90 hours a week. I can do bookkeeping in my sleep. The reason why you don't want to do it, A, you probably will fall behind with it and it won't be accurate. B, you're probably gonna mess it up. C, the big thing is when you first do the acquisition, you have to stand up the balance sheet with your proper opening balances from the acquisition. And even like basic bookkeepers don't know how to do that. It's really got to be like a trained accountant or a tax professional that does that. And if that step isn't done right, it'll mess everything up. Another thing that messes things up is person buys a business, they sign up for a new CRM, which is cool, and that CRM says, oh, we easily integrate with QuickBooks Online. Every CRM says that, and then you go connect them and it just like breaks all your bookkeeping. Usually because like it messes up the chart of accounts. I mean, we've seen it like somebody bought a pool or a lake management business, like they clean lakes, and they have recurring revenue contracts, and their CRM was double booking the revenue, and they couldn't figure out like why their cash didn't feel accurate for like 6 months. And it was because like the way they integrated with their CRM. So don't do your own bookkeeping. Second one, don't use the seller's QuickBooks file. In an asset sale, you're going to have a new EIN. So that should be obvious. But sometimes in a stock sale, people are like, oh, I'm using the same thing. I'm going to use the same QuickBooks file. It's just so messy, right? Like you always want to open up a new QuickBooks Online file because it's just cleaner. You don't want to meddle with their bank accounts. Their chart of accounts is probably like really long and drawn out. And even if there's like customer history in the QuickBooks Online, like we can export that and grab it. Like just open up a new QuickBooks Online. It's so much easier and cleaner. Third thing, we mentioned payroll. Don't wait to set that up. And fourth thing, don't wait to pick who you're going to do bookkeeping and tax with. So you should probably decide that like when you're sending LOIs or once you're under LOI, like who you're going to work with post-close. But that's the other thing we see is like people come to us and like, hey, I bought a business 6 months ago, and it's so much more expensive and messy to like clean up 6 months worth of accounting after the fact. So try to pick your provider early. What to do? So
Pat, I'm sorry, man, if I can jump in here real quick.
Yeah.
Would you recommend sticking with the CPA that the sellers have been using for years since they know the business?
I'm biased, obviously, but it's up to you. Usually what I see, I mean, that's for you to fill out during due diligence. Like usually what I hear from everyone during due diligence is just like, these financials aren't accurate. The CPA is really old school. Like they're using QuickBooks Desktop. So I also think like they're just going to be biased towards the seller. So I recommend like going with like a newer modern firm, and yeah. So
I've heard some similar sentiments from my line of work as well. After people close, they're like, "Oh, this is terrible." So
yeah.
I echo what you're saying.
Yeah. Cool. Tell me if you have other questions. So what to do? You can wait on entity selection, right? So like if you open an LLC to like do your search and send LOIs, you can decide later if you're going to elect to be taxed as an S corp, a partnership, a C corp. Usually, honestly, like the type of business you're buying and the deal structure influences the entity selection, right? So, certain industries make more sense to be a C corp if you're going to try to go for QSBS. If you have investors, like that might dictate the type of entity selection that you can make and the investor terms. If you're doing it all, self-funded, you could file as a sole prop, or you could make an S corp election later. But ideally, figure out your entity selection 2 to 4 weeks before closing, and then start your onboarding for payroll early, as I mentioned. Costly mistakes. So these are just a few specific examples that we've seen people do that can cost them a lot of money. I see a lot of people that try to do their own S Corp election. There's a form 2553 and they mess it up. I've seen attorneys mess it up, consultants mess it up, engineers mess it up. And when you do that, you're missing the tax benefit. So you could be saving like 10 to 15 grand a year. And if you don't do that, you miss that. Also with S Corps, you have to be on payroll as an owner. So if you don't do that, there's penalties and back taxes that you have to pay. Also with S Corps, if you have investors with preferred returns, you can't do that because you can only have one type of shareholder in an S Corp. And so if you do that, it'll blow up the S Corp and you'll become a C Corp. And if you didn't want to do that, you're now a C Corp paying higher taxes. Or if you elect partnership and you put owners on salary, you've overpaid payroll taxes. Owners in partnership should just be guaranteed payments if you want to set it up that way. So those are a few specific costly mistakes to avoid post-close. Anyways, so that is a wrap. Happy to chat more and connect with people. If you have questions, I'll hang out here. But if you want to check us out online, appletreebusiness.com, or shoot me an email. I'm always happy to chat with people on Twitter, on LinkedIn. Yeah, appreciate the opportunity and the time. So any questions?
Perfect. Thanks so much, Patrick. I'll open it up. Israel or Travis, Austin, anybody? I'm seeing some folks. Anybody got any questions? Because I could probably talk to you all day long. I guess I'll start it off. From when do you prefer that folks get engaged with you guys? Because I've seen, people get, I'm buying a business, and so they kind of get this accounting team, their deal team structured. Do you guys like coming in at that point, or do your services kind of start once you're kind of running the business?
So we've now started offering quality of earnings and to help with financial due diligence. So we started doing that this year. So once you're starting to look at deals and send LOIs, happy to chat. If you do quality of earnings with somebody else, we can work with you post close. I would say once your LOI is accepted, happy to chat and give you a quote for what things would look like post close, or just try to answer questions. So.
And from an accounting perspective, do you find that is there kind of a way to prepare? I've just seen anecdotally with actually some folks in this group that they get the keys to the business, and then day one that they're something will come up from an accounting perspective. You mentioned payroll. I think that's a big one that you see come out of left field. I don't know if you could maybe run down kind of how you like to approach a closing of a business and kind of things to kind of look out for, red flags leading to that, when the keys are are yours and you open the door and you're the business owner. What kind of things do you recommend people kind of try to work through or connect with, either internally or externally, to kind of limit that exposure?
Just in terms of having your accounting buttoned up, or I guess I'm not understanding that.
Yeah, I guess. I mean, just kind of who to connect with from a payroll perspective.
Oh, okay. Got it.
Yeah, things of that nature.
Yeah, so we have an in-house payroll department, or you could go with one of the big ones, Paychex, ADP, Gusto. So, you can see who the seller used, and if they really like them, or, if it seems like a good, modern solution, you could go with that, or you could find a new provider. As I mentioned, 90% of acquisitions are asset sales. So you're going to have to do a new EIN and new payroll instance anyway. So you aren't necessarily married to their payroll. I think, what else should I say? Banking, a lot of times your SBA lender doesn't also do operating accounts. So pick pick your bank and find a good operating account. Selfishly, from an accounting perspective, we don't like banks that don't show check images. So like if you buy a tree service business and you get 20 checks a month from homeowners and we can't see those check images on the bank statement, like we can't do the bookkeeping. So commonly see that if you go with like a small credit union or community bank. So I would just check like other check images on the bank statement. A couple other tools that we like. We're big fans of Ramp. So Ramp is a like credit card management and expense management tool. So if you're buying any business that has like trucks, it's great for that, right? So if you buy an HVAC business with like 6 trucks and they have like fuel cards, Ramp is really good for being able to like turn on and turn off credit cards and like manage that and de-risk like embezzlement. And it integrates really well with QuickBooks Online. What else should I say? Yeah, I think the big thing is like those first few months, you're just getting your bearings on the financials. And you want to try to get your, financial statements quickly so that you can see like you're in a healthy position and like be able to sleep at night, We also see a lot of people that like buy an old school business. The AR doesn't have really good processes. So like if you just tighten up your process around how they do AR and send out invoices quickly and get paid, that can definitely be a good win. We had a searcher buy a pool service business and like the wife had a full-time job and she sent invoices. And so like the cash flow is really lumpy, and just being able to like use a CRM, get people in auto pay, speed up the cash collection, help that person a lot. So
Perfect.
Yeah.
We got a question in the chat from Austin. Said he's had a few deals that already have QOVs from prior busted deals, or the owner supplied in good faith. How do you, or would you think you all would approach using prior QOV, if at all? So like, I guess there was a QOV done and then the deal busted, and if that QOV was in place, would you look at it in with any type of, would you give that any type of worth, or would you kind of go square one, I guess is maybe what he's.
I think if it's a firm with a good reputation and it hasn't been more than 6 months, yeah, I would look at it. I think the most critical part of the QOV is the proof of cash. So, a lot of them include like 10 or 12 different things. The proof of cash is one of those. But what you're doing with the proof of cash is you're taking the bank statements and basically recreating the financials to say like, okay, they're saying it made 800,000 of SDE on these financial statements. Let's take the bank statements from the last 12 months and the credit card statements and like see if that's true. Because people can manipulate financial statements and have sloppy accounting and bookkeeping, and we'll recreate it, and like sometimes it's close and sometimes it's just way off. So anyways, that would be my answer. If it's a reputable firm and if it was done within the past six months.
Cash is king. That's what he said. And
yeah,
makes sense.
yeah.
Okay. Well, we're right at time, so I can kind of leave it to you, Patrick, if you have some closing remarks. And just again, thank you so much for your time. I can't speak enough about how helpful you are to folks as far as connecting with people that I know that have had just really great interactions with you. And I really appreciate everything you're doing for the community. And it's great to see you, man. So floor is yours, and thanks again.
Thank you for having me. And yeah, happy to chat with anybody, and thank you all for your service. So see you guys.